Most people think Cristiano Ronaldo got rich by kicking a ball. They're dead wrong. And that misconception is exactly why most people will never accumulate real wealth. Because while everyone sees the goals, the trophies, the fame, they completely miss the billion-dollar chess game happening behind the scenes. A game so sophisticated, so strategically orchestrated, that it turned a kid earning $20,000 a year into football's first billionaire, commanding a net worth of $1.4 billion as of October 2025. Over $200 million annually. Not from football alone, but from a financial empire so diversified, so intelligently structured, that it will continue generating wealth long after he stops playing. And here's what matters to you. The principles he used to build this empire are the exact same principles the ultra-wealthy use across every industry. They're replicable. They're learnable. And most people never discover them because they're too busy watching the highlight reels instead of studying the bank statements. I'm William Vanderbilt, and today we're going deep into the financial architecture of Cristiano Ronaldo's wealth empire. Not the surface-level story, the actual strategic framework, the decisions that multiplied his wealth 12,000-fold over 23 years, the psychological mindset shifts that separated him from every other elite athlete, and the specific wealth-building mechanisms you can apply immediately, regardless of your starting point. Because understanding how Ronaldo converted athletic excellence into permanent financial dominance will teach you more about wealth accumulation than a decade of business school ever could. But before we dissect this billion-dollar playbook, I need something from you. If you're serious about understanding how real wealth is built, not just earned, you need to hit that subscribe button right now. Because what I'm about to reveal goes against everything conventional financial advice teaches. The strategies I share on this channel aren't theory. They're battlefield-tested principles used by billionaires, moguls, and financial titans who've mastered the game everyone else is losing. And if you're not subscribed, you're going to miss the advanced frameworks I'm dropping every single week. Hit subscribe, tap the notification bell. Because the people who take wealth building seriously don't leave their education to chance. They position themselves in front of the right information. Consistently. Do that now. And while you're at it, smash that like button, because it tells me you're ready for the advanced material, not the watered-down beginner content everyone else is consuming. Let's go. $20,000. That's what Ronaldo earned in his first professional season with Sporting CP in Portugal. $2,400 per month. Most college graduates today earn more than that straight out of school. But here's where the story gets interesting. 1 year later, at age 18, he signed with Manchester United for $3 million annually, a 150-fold increase, in 12 months. Now, most people would celebrate that and get comfortable. Lock in that income, buy the car, the house, the lifestyle. Ronaldo did the opposite. And that decision, that psychological framework, is the first critical lesson in his wealth blueprint. Let me tell you about a man named Mikhail Prokhorov, Russian billionaire. Forbes estimated his wealth at over $13 billion at his peak. Prokhorov made his first fortune in the nickel and gold mining industries during Russia's privatization period in the 1990s. But here's what's fascinating. When Prokhorov was 30 years old, and already worth hundreds of millions, he took one of the most counterintuitive career moves imaginable. He stepped back from operations, installed professional management, and spent 3 years studying international finance, investment structures, and global wealth management. His colleagues thought he was insane. "You're already rich," they said. "Why risk it?" His response reveals everything. Being rich today means nothing if you can't compound it into dynasty wealth tomorrow. 3 years later, he re-entered the market with a completely reconstructed investment philosophy, acquired stakes in dozens of international companies, purchased the Brooklyn Nets, and multiplied his wealth tenfold. He understood something most people never grasp. Your first win is just table stakes. The real game is structuring your earnings so they compound without your active involvement. Ronaldo operates from this exact framework. When he signed with Manchester United at 18, earning $3 million annually, he didn't optimize for lifestyle inflation. He optimized for positioning. Manchester United wasn't just a team, it was a global platform. The English Premier League reaches over 4.7 billion people worldwide. Every match, every goal, every performance was a marketing event, reaching hundreds of millions of potential consumers. He wasn't just playing football, he was building brand equity. And brand equity, when properly monetized, generates far more wealth than salaries ever could. By 2009, at age 24, Real Madrid paid a then world record transfer fee of $97 million to acquire him. His salary jumped to $15 million annually, later escalating to $28 million by 2013. Over 9 seasons in Madrid, he earned approximately $270 million in salary alone. But here's the critical detail everyone misses. During those 9 years, his endorsement portfolio exploded to $60 million annually. He wasn't just earning football salaries anymore. He was building parallel revenue streams that operated independently of his athletic performance. Hotels, fashion lines, fragrances, fitness centers, media investments, each generating recurring revenue, each appreciating in value, each multiplying his wealth geometrically while everyone focused on his salary. This is the first major wealth principle, progressive career positioning. Ronaldo never stayed comfortable. Every transfer was strategically timed to maximize both compensation and global visibility. He didn't just chase money. He chased platforms that expanded his market reach. Manchester United gave him European visibility. Real Madrid gave him global dominance. Juventus gave him Italian luxury brand association. And then came the move that changed everything. December 2022. Cristiano Ronaldo signs with Saudi Arabian club Al-Nassr. $227 million annually, later reported as $200 million per year. The entire football world erupted. Critics called it a retirement move, a cash grab, the end of his legacy. They were completely wrong, and their failure to understand the strategic brilliance of this decision is exactly why they'll never build generational wealth. Let me explain what actually happened. This wasn't a football contract. It was a total compensation architecture designed to accelerate wealth accumulation at a rate impossible in European football. The deal included a tax-free environment, meaning every dollar earned is a dollar kept. A signing bonus of approximately $100 million. Equity ownership of 30% of Al-Nassr, giving him ownership stakes in a rapidly appreciating sports franchise. A private jet allowance, family support provisions, performance bonuses. And in June 2025, he extended for 2 additional years at $245 million annually, with additional equity stakes potentially totaling over $400 million across 2 years. Do the math. In traditional European contracts, even at $40 million annually, taxes consume nearly 50%. He'd net maybe $20 to $25 million per year. At Al-Nassr, he nets $200 million plus annually, with equity that could be worth hundreds of millions more if the Saudi Pro League continues appreciating. This single decision will generate more wealth in 5 years than he earned in 15 years at Manchester United, Real Madrid, and Juventus combined. That's not a retirement move, that's financial warfare. And here's the psychological lesson. Sophisticated wealth builders don't optimize for reputation in the short term. They optimize for capital accumulation that funds long-term dominance. Ronaldo knew exactly what the critics would say. He didn't care, because while they were protecting their opinions, he was securing generational wealth. This is the mindset difference between people who earn well and people who become billionaires. Billionaires prioritize capital velocity over social validation every single time. Now let's talk about the mechanism that will keep generating wealth long after Ronaldo retires. His Nike lifetime deal, signed in 2016, valued at over $1 billion, generating approximately $18 million annually. Forever. This isn't a 10-year endorsement contract. This is permanent income decoupled from performance. Michael Jordan signed a similar deal. LeBron James signed one. These lifetime agreements create dynasty wealth because they transform athletic fame into permanent consumer brand equity. Think about what this means structurally. Ronaldo could suffer a career-ending injury tomorrow. His football salary stops. But his Nike deal continues. His hotels continue generating nightly revenue. His fitness centers continue collecting monthly memberships. His fashion lines continue selling products. His media investments continue appreciating. His real estate portfolio continues compounding. The football salary, which everyone thinks is the wealth source, is actually just one stream among dozens, and not even the most valuable one long-term. This brings us to the second critical wealth principle, brand equity monetization. Ronaldo has built a personal brand so powerful, so emotionally resonant with consumers, that the CR7 logo alone commands premium pricing across industries. His fragrances reportedly outsell Chanel in parts of Europe. His hotels command luxury rates because guests want to experience the lifestyle associated with his brand. His fitness centers attract members who want to train like Ronaldo trains. This is branding mastery. And it's worth far more than any salary, but here's where it gets even more sophisticated. 656 million Instagram followers, the largest following of any individual on the platform. He earns between $1.4 and $1.9 million per sponsored post. $16 to $22 million annually just from Instagram. No travel required, no physical exertion, no career risk, just posting content. But the real value isn't the sponsored post revenue. It's the free marketing distribution for every business he owns. When Ronaldo posts about his hotels, 656 million people see it instantly. When he promotes his fitness centers, it goes viral within minutes. When he launches a new product, he has a built-in audience larger than the population of the entire European Union. Most entrepreneurs spend millions on advertising trying to reach customers. Ronaldo reaches more people with a single Instagram story than most companies reach in a decade of advertising. That's not just influence. That's a structural competitive advantage that makes every business venture he touches exponentially more valuable. Let me take you back to another wealth case study. Oprah Winfrey. Peak net worth estimated at $3.5 billion. Everyone knows Oprah from her talk show, but here's what most people don't know. The talk show was never the wealth engine. It was the platform. Oprah used the show to launch O magazine, which became one of the most successful publications in history. She launched Harpo Productions, owning the content rather than just hosting it. She invested in Weight Watchers, turning a $43 million investment into over $400 million in returns. She launched OWN, the Oprah Winfrey Network, creating a media empire that generates revenue independent of her daily involvement. And she built all of this by understanding one critical principle. Audiences are assets that can be monetized through multiple channels simultaneously. Ronaldo operates from the exact same playbook. His 656 million followers aren't just fans. They're a monetizable asset he leverages across hotels, fitness, fashion, media, and luxury goods. And because he built authentic engagement, not just follower counts, those followers actually buy products, book hotels, join gyms, and evangelize his brands. That's the difference between influence and wealth. Influence gets you paid once. Converting influence into owned assets generates wealth forever. And this is where your biggest takeaway opportunity is. Drop a comment right now and tell me, what's the one asset you're building that will generate wealth independent of your time? Because if you can't answer that question, you're stuck in the earned income trap that keeps 99% of people broke. The wealthy don't trade time for money. They build assets that generate money while they sleep. Comment below. Let me know what you're building. Because the clarity you get from articulating your strategy will accelerate your progress faster than another year of consuming content without implementation. Now let's dissect the empire itself. The CR7 business portfolio. This is where Ronaldo's wealth strategy reveals its true genius, because while everyone sees the football player, they completely miss the diversified holding company operating behind the scenes. Let's break it down industry by industry. Hospitality, the Pestana CR7 lifestyle hotels, properties in Funchal, Lisbon, Madrid, Marrakech, and New York. Planned expansion to Paris. These aren't just branded hotels, they're equity stakes in appreciating real estate assets that generate nightly recurring revenue. Think about the structure. Every night, every room, every guest generates income. Multiply that across 5 international properties operating at 70 to 90% occupancy. That's millions in annual recurring revenue, and the properties themselves appreciate. Madrid real estate has appreciated approximately 8% annually over the last decade. His hotel assets are simultaneously generating income and appreciating in value. That's compound wealth building. Fitness and wellness. CR7 Crunch Fitness. Gyms operating across Europe with expansion into Asia and the Middle East. Monthly membership revenue. Recurring, predictable cash flow. And here's the beautiful part. Fitness is counter-cyclical to economic downturns. When economies struggle, people focus more on health because medical costs become prohibitive. His gym investments generate revenue even during recessions. Additionally, he co-founded Inspiria, a hair transplant clinic network across Portugal and Spain. Healthcare diversification, recession-resistant, high-margin services. This is sophisticated portfolio construction, fashion and lifestyle. The CR7 brand, clothing, undergarments, fragrances, accessories, shoes. His fragrances reportedly outsell Chanel in parts of Europe. Consumer products at scale. Once the brand is established, production costs decline while pricing power remains. High margins, global distribution. This is where personal branding converts directly into product revenue, media and technology. 2023. Ronaldo acquired significant stakes in Portuguese media company Media Livre, gaining influence over major publications. He invested in Chrono24, a luxury watch marketplace. He established a 50-50 joint venture with filmmaker Matthew Vaughn in production company UR. Marv. Media assets appreciate based on content libraries and audience reach. Technology investments provide exposure to digital transformation. These aren't passion projects. These are strategic positions in high-growth sectors, consumer goods and luxury. He acquired 10% of Vista Alegre Atlantis, a 200-year-old Portuguese porcelain brand, investing €17.3 million. Heritage brands provide stability, prestige association, and steady cash flow. This investment connects him to European aristocratic consumer culture while providing equity appreciation. Real estate. Beyond hotels, Ronaldo owns a diversified property portfolio. £17 million properties on Portugal's coast, multi-story apartment buildings, villas across Europe, luxury Lisbon apartments, total assets worth tens of millions. Real estate appreciates, generates rental income, provides collateral for leverage, and survives economic cycles. Now here's the critical question. Why this specific diversification strategy? Because each investment serves a different purpose in the wealth architecture. Real estate provides appreciation and collateral. Hospitality generates recurring revenue. Consumer products leverage brand equity. Media provides influence and content ownership. Healthcare offers recession resistance. Fitness taps demographic trends. Technology provides growth exposure. This isn't random. This is a professionally managed portfolio designed to generate wealth across multiple economic scenarios simultaneously. And this brings us to the third wealth principle, strategic portfolio diversification. Billionaires don't concentrate risk, they distribute it intelligently across asset classes, geographies, and market cycles. If football suffers a crisis, Ronaldo still has hotels. If hospitality declines, he has fitness centers. If consumer spending drops, he has media assets appreciating based on content value. No single point of failure can destroy the empire. That's dynasty wealth construction. Let me tell you about another individual who mastered this exact principle. Roman Abramovich, Russian oligarch, estimated peak net worth over $14 billion. Abramovich made his initial fortune in oil during Russia's privatization, but he didn't stay concentrated in energy. He diversified into steel, invested in mining companies, acquired stakes in aviation, purchased the Chelsea Football Club, built a private art collection worth over $1 billion, invested in biotech and life extension research, and established venture capital funds focused on Israeli technology startups. When Russian sanctions hit his oil assets, he still had steel revenue. When steel markets declined, he had Chelsea appreciating. When football regulations changed, he had art appreciating. When traditional industries struggled, he had technology investments growing. His wealth survived multiple geopolitical crises because no single event could destroy diversified positions across industries and geographies. Ronaldo built the exact same structure, and he did it with something Abramovich didn't have: 656 million followers, providing free marketing for every venture. That's an unfair advantage that makes every business more valuable. But here's what separates good diversification from great diversification: professional infrastructure. And this is the element most people completely overlook. Behind Ronaldo's empire is a man named Miguel Marques, 52 years old, LM Capital Wealth Management in Lisbon, operating from an office above a Louis Vuitton store on Avenida da Liberdade. Marques manages approximately 1.4 billion euros in assets and serves as Ronaldo's chief wealth strategist. Deal structure, investment screening, privacy protection, tax optimization, estate planning. This infrastructure is essential. Here's an example of how sophisticated this operation is. When Ronaldo purchased a 17 million euro coastal property in Portugal, Marques structured the acquisition through entities that protected Ronaldo's identity until the deal closed. Why? Because the moment sellers know Ronaldo is the buyer, prices inflate. Speculation drives up valuations. Media attention creates bidding wars. By maintaining privacy, Marques saved millions on the transaction. That's not just wealth management, that's wealth optimization through information asymmetry. And here's the fourth wealth principle: professional wealth infrastructure. Billionaire athletes require specialized advisors operating with the same rigor as corporate boards, not massive teams, small, trusted circles with aligned incentives. Ronaldo doesn't have 50 advisors. He has 5 to 7 key individuals who've been with him for years. Trust matters more than credentials. Alignment matters more than reputation. And discretion matters more than visibility. Most people fail at wealth building because they either have no infrastructure or they have the wrong infrastructure. They hire financial advisors compensated by commissions, creating incentive misalignment. They work with generalist accountants instead of tax optimization specialists. They lack estate planning attorneys, structuring assets for generational transfer. And they have no one coordinating strategy across investments. Ronaldo has all of this. That's why his wealth compounds, while others' wealth stagnates. Now let's talk about the asset everyone undervalues: reputation. Ronaldo's personal brand isn't built on football alone. It's built on a carefully crafted narrative: discipline, fitness obsession, family commitment, humble origins, rising from poverty to global dominance. This story creates emotional connections that transcend sports. Consumers don't just buy CR7 products because Ronaldo is famous. They buy because they believe those products embody the values he represents. Discipline, excellence, dedication. That emotional connection creates pricing power. His hotels don't just charge luxury rates because they're nice hotels. They charge premiums because guests want to experience the lifestyle associated with his brand. His gyms don't just attract members because they have good equipment. They attract members who want to train with the mindset Ronaldo embodies. His fragrances don't just sell because they smell good. They sell because wearing CR7 fragrance makes consumers feel connected to his success. This is branding psychology, and it multiplies the value of every venture he touches. But here's the sophisticated part. Ronaldo maintains strict control over this brand. He doesn't license his name to random products. He maintains quality standards. He ensures brand alignment. He protects the narrative. Because the moment the brand becomes diluted, the pricing power disappears. McDonald's can license their name to anything because they're a mass-market brand. Ronaldo can't. He's a premium brand, and premium brands require scarcity, exclusivity, and consistent quality. This is the fifth wealth principle: brand as competitive advantage. Personal brands built on authentic values create pricing premiums across all ventures, but only if maintained with discipline. The moment you compromise quality for short-term cash, the brand erodes. And once trust is lost, it's nearly impossible to rebuild. Ronaldo protects his brand like a fortress because he knows it's worth more than all his football contracts combined. Let me give you a different example. Martha Stewart built a media empire worth hundreds of millions based on her brand as the authority on homemaking, entertaining, and lifestyle design. At her peak, Martha Stewart Living Omni Media was valued at nearly $2 billion. Then came the insider trading conviction in 2004, sentenced to 5 months in prison, brand destroyed overnight. Stock collapsed, partnerships terminated, magazine subscriptions plummeted. It took her over a decade to partially rebuild, and she never fully recovered the same level of influence or wealth. Why? Because her brand was built on trust, sophistication, and aspirational living. The conviction shattered that narrative. Once broken, premium brands rarely fully recover. Ronaldo understands this viscerally. He avoids controversy. He maintains family-focused messaging. He controls his public image obsessively. He doesn't get involved in scandals, doesn't make inflammatory statements, doesn't associate with questionable ventures, because protecting the brand is protecting the wealth engine. One major misstep could cost hundreds of millions in endorsement value and destroy consumer trust across all his businesses. So he operates with extreme discipline in public perception management. That's not vanity, that's wealth preservation. Now let's look at the salary trajectory itself, because the numbers tell a story most people miss. Sporting CP, 2002 to 2003, $20,000 annually. Manchester United, 2003 to 2006, $3 million annually. Manchester United Extended, 2006 to 2009, $10 million annually. Real Madrid Early, 2009 to 2012, $15 million annually. Real Madrid Peak, 2013 to 2018, $28 million annually. Juventus, 2018 to 2021, $35 million annually. Manchester United Return, 2021 to 2022, $35 million annually. Al-Nassr, 2023 to 2025, $200+ million annually. Al-Nassr Extended, 2025 to 2027, $245 million annually. This is a 12,000-fold increase over 23 years. But notice the pattern. He didn't maximize earnings at every stage. He could have demanded more from Manchester United in 2006. He could have pushed for higher salaries at Real Madrid earlier. He could have moved to China or Qatar in 2015 for massive contracts. He didn't. Why? Because he was optimizing for career positioning and brand equity, not immediate cash. He knew that building global recognition would unlock exponentially higher opportunities later. And he was right. This is the 6th wealth principle. Strategic patience compounds wealth. Most people optimize for maximum earnings today. Wealthy people optimize for maximum positioning that unlocks exponentially higher earnings tomorrow. They're willing to accept lower compensation in the short term if it provides platform access, skill development, network expansion, or brand building that multiplies future earning power. Ronaldo turned down higher-paying offers multiple times because he understood the math. A few extra million today meant nothing compared to the billion-dollar platform he was building for tomorrow. And here's where we need to address the psychology behind all of this, because understanding the mechanics of Ronaldo's wealth is useful, but understanding the mindset that drove those decisions is transformational. Let me ask you a direct question. When you receive income, what's your first instinct? For most people, it's consumption. New car, bigger house, better clothes, nicer restaurants, luxury vacations. They scale lifestyle with income. Ronaldo did the opposite. He scaled investment with income. Every salary increase funded new business ventures. Every endorsement deal funded real estate acquisitions. Every bonus funded equity positions. His lifestyle remained relatively consistent while his asset base exploded. There's a concept in behavioral economics called hedonic adaptation. It means humans quickly adjust to new levels of pleasure or comfort, requiring ever-increasing stimulation to maintain the same level of satisfaction. Buy a luxury car, you're thrilled for 3 months, then it becomes normal and you want a better one. Upgrade your house, you're excited for 6 months, then you want a bigger one. This treadmill keeps people broke because they're constantly consuming their income growth instead of converting it into assets. Ronaldo broke this pattern, and here's how. He tied his identity to wealth building, not wealth display. His satisfaction came from watching his portfolio grow, not from showing off possessions. He measures success by asset acquisition, not consumption. This is the psychological shift that separates billionaires from everyone else. They derive pleasure from the game of wealth building itself, not from the lifestyle wealth enables. And that shift makes them nearly unstoppable because they're never satisfied with their current level. They're always hunting the next strategic position. Let me tell you about someone who failed to make this shift. Mike Tyson, boxing legend, earned over $400 million during his career, filed for bankruptcy in 2003, owing $23 million in debt. What happened? Consumption. He bought $50 million in cars, multiple mansions, jewelry, private jets, a pet tiger. Tyson's identity was tied to displaying wealth, not building it, so when the boxing income stopped, the expenses continued, and the assets weren't there to cover them. Bankruptcy was inevitable. Contrast that with Ronaldo. He owns properties, but they're investments that appreciate. He has nice things, but they represent a tiny fraction of his asset base. His wealth is working capital funding empire expansion, not consumption capital funding lifestyle inflation. That mindset difference is worth hundreds of millions of dollars. And this brings us to the seventh wealth principle. Psychological discipline trumps financial knowledge. You can know everything about investing, business, and wealth strategy. But if you lack the discipline to delay gratification, avoid lifestyle inflation, and prioritize asset accumulation over consumption, you'll never build meaningful wealth. Period. The math is secondary to the mindset. Fix the psychology, and the wealth follows automatically. Now, if you're still with me, you're in the top 1% of people who actually complete educational content instead of jumping to the next dopamine hit. And that discipline alone puts you ahead of most people. But here's what I need you to understand. Information without implementation is just entertainment. You've now learned the 7 core wealth principles that built Ronaldo's billion-dollar empire. Progressive career positioning, brand equity monetization, strategic portfolio diversification, professional wealth infrastructure, brand as competitive advantage, strategic patience compounds wealth, psychological discipline trumps financial knowledge. These aren't theory. These are operational principles you can apply immediately, regardless of your current income level. You don't need football talent. You don't need millions of followers. You need strategic thinking and disciplined execution. So here's your homework. Identify one career move, one skill acquisition, or one network expansion that would position you for exponentially higher opportunities within 2 years. Not maximizing today's income, positioning for tomorrow's explosion. Write it down. Build a plan. Execute relentlessly. Second, identify one asset you can build that will generate income independent of your active time. A business, an investment property, an online platform. Something that compounds while you sleep. Stop trading time for money. Start building wealth machines. Third, audit your spending against your values. How much of your income is funding consumption versus asset accumulation? If more than 50% is lifestyle, you're on the path to staying broke forever. Reverse that ratio. Make wealth building the priority, consumption the residual. And fourth, invest in infrastructure. Hire a tax strategist. Work with an estate planning attorney. Get professional advice on structuring your assets for maximum tax efficiency and generational transfer. Ronaldo has Miguel Marquez. You need your version of that infrastructure. It pays for itself immediately through optimization. Here's the reality most people avoid. Building wealth requires sacrifice in the short term. You can't have everything today and build wealth for tomorrow. Ronaldo made trade-offs. He chose platform over immediate cash. He chose investment over consumption. He chose long-term positioning over short-term comfort. And now he's a billionaire at 40, with an empire that will generate wealth for generations. That's not luck. That's strategy executed with discipline over decades. But here's the final insight, and this is the one that changes everything. Ronaldo's wealth isn't about the number. 1.4 billion sounds impressive, but it's meaningless without context. What matters is that his wealth infrastructure survives his athletic career. The hotels will keep generating revenue when he's 60. The fitness centers will keep collecting memberships when he's 70. The endorsement deals will keep paying when he's 80. His real estate will keep appreciating for his children and grandchildren. He's not building wealth for himself. He's building a dynasty that transcends his lifetime. That's generational thinking. That's how the ultra-wealthy operate. And here's what that means for you. Every financial decision you make is either building toward that dynasty or burning resources on temporary satisfaction. Every dollar you spend on consumption is a dollar that won't compound for the next 50 years. Every investment you delay is exponential growth you're sacrificing. Every month you wait to start is years of compound returns lost forever. The ultra-wealthy understand this math viscerally. That's why they move urgently on opportunities while remaining patient on results. They plant trees knowing they might not see the full forest, but their children will, and their grandchildren will. That's dynasty thinking. Cristiano Ronaldo started with nothing, poverty in Madeira, no connections, no wealth, no elite education, just talent, discipline and strategic thinking. 23 years later, he's built an empire that will outlast him by generations. If he can do that starting from zero, what's your excuse? You have access to information he never had at your age. You have tools and platforms that didn't exist when he started. You have opportunities he couldn't imagine. The only thing you're missing is the decision to start, and the discipline to continue when it gets difficult. So here's my final challenge to you. 30 days from now, I want you to be able to answer these 3 questions. What asset did you start building? What consumption did you eliminate to fund that asset? And what strategic position did you secure for exponential growth? If you can't answer those questions, you didn't actually learn anything from this video. You just entertained yourself for 30 minutes, and entertainment doesn't build wealth. Implementation does. This is William Vanderbilt. You've just completed a masterclass in billionaire wealth strategy through the lens of Cristiano Ronaldo's empire. But this information is worthless unless you execute. So take action today. Make one strategic move toward building your wealth machine. And remember, the people who win at wealth building aren't smarter than you. They're just more disciplined about implementing what they learn. Be disciplined. Build strategically. And I'll see you in the next one, where we're going even deeper into the psychology of extraordinary wealth. Subscribe now so you don't miss it. Your future self will thank you.